I appreciate everyone joining us today, and hopefully Matt Nellis from National Mobility will show up in a second too. But let's first start with my friend Chris Colston. Chris is based in beautiful Coral Gables, Florida, section of Miami, and he owns a company. He's CEO of a company called Second Chance Credit Repair. So when Tara came to me about having guests for this month's series, Hidden Gem series, I thought of Chris because I'm doing a loan. I'm in the reverse mortgage business. I'm doing a loan trying to do a loan for a woman that Chris and I share. In other words, I have a client that or borrower that needed help, and so I sent her directly to Chris, who has been helping her and has been great for her. And it's not just credit repair is not just an issue in my business. It's an issue endemic of, I'd have to say, and we'll talk about this, endemic of issues facing seniors every day. In other words, when my parents moved from Connecticut to Florida, I tell this story fairly often, but my parents moved from Connecticut to Florida. And one day my father called me and told me that he had outlived his money at 80 some odd years old. And I said to him, what does that mean? And he said, well, I'm asking my children for help. What he didn't tell me until later is that he had exhausted every possible avenue before he even could bring himself to ask his kids for help. And that was, he went through his credit cards. He went through all his credit cards and just borrowed money at exorbitant rates. And I didn't know it. And we'll talk about that with Chris in a second. But my point is that if you're in the business of helping seniors age in place, whether it's home care, I can go on and on in terms of all the folks that are on this call, in terms of the businesses that you run. Financial stability, financial well-being is as important as anything else. And seniors are so reluctant to talk about this issue that's why I thought it was important to have Chris on the call. So Chris, first of all, welcome. Let's just, if we can, just for a second, just talk about your background, what brought you to this business. And I know you're not just in the business of helping seniors, but certainly, for today's purposes, the folks on this call are, certainly helping seniors age in place and live better lives. I know you do that every day as well. So can you just talk about your background, what brought you to this, and we'll go from there, if that's okay.
Thank you. Thank you, Peter. Thank you, Tara. Thank you, everyone here today. I'm such an honor to be part of this today. I was really looking forward to it. I arrived at the office today at 5 a.m. so I could do everything possible to be here at this time and not have anyone bother me. I just gave my sister one document. I'm like, don't bother me, close the door. So I've been in the business in the credit and finance since 2001. That makes me, at that time, 21 years of age. I started this because we are immigrants from Nicaragua. We arrived to the United States in 1989. And I remember when my mother was trying to purchase a home for the first time. Us Latins will go to the same bank, same person. We only want to talk to, Maria. And Maria was our gal. And Maria was supposed to guide us in the right direction from home ownership. And I remember my mother going in and depositing her checks every 2 weeks, depositing her checks, going back, depositing her check. When she thought she was ready to purchase a home, she went back to the bank and spoke with Maria and said, I'm ready. And Maria asked her, she goes, how's your credit? My mom goes, it's perfect. I come in every 2 weeks, I deposit money, and I use this plastic card that you guys give me. When they pull her credit, she had no credit. So my mother was like, what are you talking about? And she goes, ma'am, this is a debit card, not a credit card. And she was like, but you guys were supposed to tell me about this, right? Teach me. And that's the sad thing about this, ladies and gentlemen, that most Americans have credit problems. Not because we want to get into credit problems. It's because there's no education about credit or finances. And the bad reason for this is that the United States of America runs on debt. Remember, the more money you owe, the more money they make. So if you look outside your house or your building, you see those big high rises, guess who pays for those? We all do. Those credit card interest rates, 17 to 29% interest. So if you were using the credit cards, Peter, like your dad did at that time, and he's not paying them off, 17 to 29% accruing. Imagine the hole that we're digging ourselves out. And how can we get ourselves out of a hole? We have to stop doing what we normally do. We have to look at what we purchase each month. And that's very hard to do, right? Because we have a lifestyle that we live, that we want to maintain. And what happens is that catches up to us. And now we have no money. Now we're working day in and day out just to try to stay afloat. And then we miss a credit card bill. Right now I was talking to a client literally 30 minutes before. The client was telling me, I just pulled my credit and I saw that my credit score dropped by 100 points. You know what happened to her? Her credit card changed from banks, from who was billing her. When that happened, the automatic bill pay that was supposed to grab from that bank is no longer grabbed because it went to another bank. Now she misses a payment. She lost 100 points from one month to the other. There's ways that we could have prevented that, but if no one's teaching us about this, how are we supposed to know? You know, Peter was saying that, I help a lot of individuals with credit. I'm actually the credit advisor for the NFL. So 14 out of the 32 teams in the NFL, I teach about credit and finances. I always tell the guys, if you don't know how to play a game, how can you play it? So in the credit and finance world, who's teaching us how to play this game? Mom, dad, they messed up too. Right?
So where should it start, Chris?
I'm sorry?
Where should it start? Where should education start?
High school. High school. Actually, my kids right now have a debit card. When they want to go purchase something, they use their own little debit card. So a lot of banks now are giving debit cards to children so they could start learning how to do this, right? Automatic bill pays, guys. So important, Peter. We got to prevent these people from making all this money on us. And the best way to do it is to pay off those credit cards right away. Yeah. That's my probably best advice right now.
So why do seniors more important? Let's say, like, again, talking about my father's situation, what is there about the mentality that you see that you can help that gets people to wait until they think that a credit card is the same as cash, or that they wait till the very beyond the last minute? I mean, is there something psychologically that you talk about that gets someone to that point? Is it, they feel like pressured to keep up with the Joneses kind of thing? Or, I mean, from your history, both, just talk for a second about age brackets in terms of any differences, as you go from, someone younger than me to, someone my age and up. Is there a difference?
I will say here for this, yes, there is. For the seniors right now, I don't think they're trying to keep up with the Joneses, Peter. That's not the case for them. Actually, they're very relaxed and cautious about money. What I do see in the seniors, and this was what happened in the client that you referred to me, she was getting manipulated by her kids. And then you have grandkids. And then you want to purchase some toys, some items. Yeah. And they're going to their mother, put this under your name, Mom. I need you as a joint, as a co-signer. And what does the mom and the dad do? Oh, I want to be a great mom. I want to be a great dad. Let me help out my kids. And the kids are destroying the credit for the parents. And the kids tell the parents, Mom, you're old already. You're not going to need credit anymore. So who cares? Right? Until something does happen and you need it. And they destroyed it. That's what I see the most here. I don't see them overspending. They're very, very cautious with that because they know that the little bit amount of money that they have coming in every month, that it needs to last. And they know that debt is the killer of dreams. So they don't want to amount a lot of debt because they don't want to pass on that debt to their children. The seniors do not want to do that. But the kids are using the seniors almost like a bank account. Mom, go and get a credit card. Dad, go and get a credit card. I'll repay you. Don't worry about it. And it's not happening. That's what I see the most here, Peter.
And Tara, just as a segue, Tara just brought up a great point in terms of medical debt. And can you talk about medical debt, and especially now the changes that it won't show up on a credit report, and what a difference that might make for seniors?
That is a huge one, ladies and gentlemen. It's not even just seniors, but the medical community takes advantage, not just seniors, but takes advantage of everyone. Now, when it comes to seniors, and this happened to my stepdad, right? They called him from a medical collection, and he had insurance, he had everything covered. They called him for his medical collection and said, you owe us a bill. You need to pay this now. If not, we're going to call the cops on you.
Oh, wow.
Guess what he went to do? He went running, to go send what was it, those MoneyGrams? What was it that you do?
Like Western Union?
A Western Union. Western Union, to go send money to a Western Union. It was somebody baiting him, pretending to be a medical collector. But what happens is they put pressure on you, right? And you feel the pressure, and then you feel that you need to act because you can't go to jail, right? What's going to happen to you? No, you need to slow down. If someone calls you asking you for money, please tell them, please mail me any documentation, any legal documentation that you must have under my name. Mail it to me so I can review with my attorney, and then we will give you a call. That's the right words to use. If you also get something over the mail saying that you owe them money, do not just write a check just because someone's saying that you owe them money. Give them a call, see why they're sending you a bill, contact your insurance company, see if they're supposed to cover it, and then you make arrangements. But to go to Peter's question there, if you ignore it, they will put it on the credit report. Supposedly, starting in June, they're not supposed to put things in the credit report, medical. But you see this supposedly, they will do it anyhow, right? Because who's going to cover them? Who's going to hold them liable? So you have to be very careful with these items. Also, if you have moved from one place to another place, that happens a lot to seniors, right? They move. You have to do the mail forwarding. If you don't do mail forwarding, they can say, look, I sent it to you to the old address. Oh, no, you did not. You need to keep track of all these things. And it's a big, big, big headache. And they target seniors. Because remember, it's free money, ladies and gentlemen. And they don't care how nice they are. They're not meant to be nice. They're a collection company. Their job is to collect money. Yep. So yes, Peter and Tara, I'm sorry, Tara. Medical bills is a big one, and they will harass you, and they will literally push you to the limits so that you can send the money. No Western Union, none of that stuff. Please, none of that stuff.
So in terms of perhaps my credit score, if I have medical bills on there and they go away, will that significantly help my score, or it won't matter?
Yes, it will. It will significantly help out your score. So after June, they're no longer supposed to be reporting there. But also, if you have any type of collection accounts, now more so, they're doing what is called pay to delete. So you pay them, and they will delete it from the credit report. So it could be a utility collection. If you pay them that amount, they will delete it from the credit report. Now they're doing it more because of the pandemic. A lot of these collection companies have not been getting money, back. So they're being a bit more aggressive, or they're being a bit more lenient. Just understand that if you get a lot of harassment calls, it's because they have not been, got their money back. So they're going to harass you and press you to the limits on that. But yes, if you could get it off, it will improve your credit score, 40, 60 points, Peter.
Can you talk about what protections I have as a senior so that I can't be harassed, and how you put an end to those? And at the same time, you must see a fair amount of elder abuse that gets somebody to that point as well. So are you ever in situations where you report somebody to a specific state agency or something along those lines?
So no one can harass no one. So it's not just seniors. No one can harass you. So if someone gives you a call and it's a harassment call, or they call you back to back, you can tell them, Peter. For example, you could tell me, Chris, I need you to stop calling me. I'm recording this phone call today, April 19th at 1:20 p.m. You cannot call me back again. If you do so, I can actually report you, and you can do that. There's actually attorneys that will take on those cases and all that, Peter. So yes, no one can harass you. But if we don't know the law, do we have rights? Right? If you don't know your rights, you don't have rights.
Right.
So this is a very important one. No one can harass you on that.
And along those lines, are you seeing, well, a couple of things. One is that, are you seeing cases where you would suspect elder abuse from children, as you're talking about earlier? And then secondly, do you ever, or have you ever reported cases of those?
Yes, yes. And ladies and gentlemen, if you're gonna get an advice today, this is the advice here. Please pay attention. Sign up to monitor your credit. You need to monitor your credit per month. The best website to do this is Experian.com. Experian.com is the best one.
Okay.
Seniors are targeted by the bad people, right, to steal their identity. Because then, as a senior, supposedly you have already your home and you have your automobile. You don't need to purchase anything, right? You're in your golden years. You're set. So they know that you're not going to be tracking your credit. So what they do then is that they will steal your identity and they will start buying things under your name. So the number one thing to see on the credit report is look at the AKAs, your alias. See if there's different variations of your name on that credit report. Very important. If there is, now you know that someone grabbed your information and stole it, or your information is being confused by another person. For example, in Miami, you know how many Jose Rodriguez we have here? Gazillions. And that happens all the time. I see it all the time, Tara. Literally, it's like, so if you have a middle name, you must use it. So if it's Jose Manuel Rodriguez, then you're unique. So you got to make sure those aliases. Number two, look at the addresses on the credit report. A lot of the times you will see different addresses, something you do not recognize. We had a case, Peter, a young lady, she was 24 years old. She had an address from Washington, Seattle, Seattle.
Yeah.
And she goes, I never went there. She had a student loan from the University of Washington reporting on her credit. And she went to Florida State. It was $100,000 student loan. She never checked them. So imagine the things that can happen. And I will tell you something here, ladies and gentlemen. I represented a case of a lady that she was getting divorced. Her family attorney referred her to me. We saw an address on that credit report that did not belong to her. And this is a very sad story. Her ex-husband was using her credit to rent another apartment. So you have to monitor your credit because your loved ones that know your information can be doing something bad under you.
Yep.
Right?
Yep.
So I'm just telling you the truth that I've seen in 21 years of doing this, of what happens. And as well, you have to look at the accounts that are there on the report. Make sure that all those accounts that are open, that if they belong to you.
And what rights do I have if that happens to me?
You gotta go one by one. Oh, you can go to the police.
Yeah.
Peter. Yes, you gotta set up a police report so that you can identify that this right here is incorrect. And with that police report, then you can contact the credit bureaus to help them eliminate that. Thank you, Tara, for putting that. Yes, that's it right there, Experian.com.
And are you finding that more and more are you dealing with more clients?
Yes. It's very, people now after the pandemic are getting very creative with money. Actually, credit card debt increased by $41 billion in just this beginning of this year, this quarter, $41 billion. And they're grabbing money and tapping money from everywhere. I know individuals here that they put their parents as CEO of companies and they just get lines of credit, against, mom, dad. They make them get a second mortgage. It's really bad. One of the things I tell you, and I work with my mom. My mom is actually here at the office. We worked, you got to just say no. You got to look out for yourself. You have to look out for yourself because your last years are supposed to be the best years. Don't put this baggage over you. Don't put it over you. We had a lady, she was a senior. Her daughter was harassing her, telling Mom, you got to refinance this house because you owe me money. And she goes, where do I owe you money from? Remember 20 years ago, you owe me money. And now the lady now had to move into a home because she had to sell her house. It's crazy, the things. But because there's programs for that, right? To make that happen. But to answer Tara's question there, if a senior's existing medical bills, yes, you could ask to remove it after June 1st, Tara. Yes, you could ask them to remove it. You got to contact the creditor, right? The person, the medical collector, and also make sure you contact the credit bureaus to have eyes on them. That's why the Experian site is so good, because you can monitor the changes that you're requesting.
So in other words, no medical creditor will remove anything automatically after June 1st. You've got to make sure that they take care of it.
The one of interest is you. They're not going to do it for their good of their heart. The one of interest is you. You have to be proactive with these items. Yeah, that's the same thing. Like, I have a lot of clients that have bankruptcies, right? They're like, oh, my bankruptcy happened 10 years ago. It's supposed to go away. Supposed to go away, but they don't just press a button. You have to request them to make them go away.
Yep.
So I see over here. So what happens if you have an incorrect address? If you see an incorrect address, you have to contact the credit bureaus. So in Experian.com, you can purchase all 3 reports and all 3 scores. My advice is to do that because you have Equifax, you got TransUnion, and you have Experian. So you must check all 3 reports because they're individual companies. So if you see an incorrect address, you got to contact that specific credit bureau and tell them this is incorrect. It's very important that you do that because if someone is using your information, right, that means that they're using that other address. You may not live at that address or you never lived there. But because that address is in your file, they could open up other accounts and use that address as your home address. And because it's on the credit report, is a verifiable address. So automatically, that loan or credit card will be approved or easier to be approved.
Yep. And again, I hadn't really thought a whole lot about that. Identity theft is obviously a big part of what you do, and it's such a big issue. And we just went through that with my wife, and she had her wallet stolen. And there's always the joke where, we didn't do anything about it because the guy who stole her wallet was spending less than her. So, but
he did you a favor.
What's that? But the reality of it is,
he did you a favor. You saved more money that month.
Yeah,
you have more money that month.
Exactly. But the other part of it too, though, and this is true, is that steal my wife's credit card, and they spent $400 at Dollar General. So I can't figure out, like, did they walk out with 400 bags of stuff? And you would have thought at the Dollar General, they would have figured out that maybe this wasn't legitimate. But if you're going to do it, like, go to
you know why they do. They won't do it there, Peter. You know why they do it at Dollar General? Because they're trying to test. They're trying to test that credit card. They're trying to see if it will go through, right?
Yep.
Plus, also, Dollar General is not going to get a $400 purchase at once. So now they're saying, okay, we could get away with this because Dollar General does not get a one transaction of $400. So when Dollar General sees that, it's like, oh yes, go through. We're not going to question none of this. And remember, a lot of these credit card companies, they have insurance on it. So they say, okay, whatever, let it run through. But it's better to use your credit card than to use a debit card, because if someone steals your debit card information, they're stealing money directly from your checking account. You got to be very careful with that, very careful. Even though the banks will do an investigation and refund the money, but it could be in a week or 2 weeks. With the credit cards, you got that immediate protection. Just don't get caught up, ladies and gentlemen, on using a credit card that you cannot pay off at the end of the month. One of the things that I do personally, and sometimes it hurts, I'm not going to be a hypocrite, okay? Sometimes it hurts a lot. I sit down on Saturday mornings drinking my coffee and I look at my credit card statement. And sometimes I'm like, oh my God, Chris, what have you done? It's like, whoa, you're getting too out of hand. So you don't have to make a payment on your credit card once a month. You can make payments on your credit card multiple times per month. They tell you only once a month because they want you to bill and bill and bill and build up this debt, and then you can pay it off at the end of the month. And now you send a minimum payment or $200, $300. No, you can make a payment each week. I send a payment every Saturday to my credit cards, and this is how I keep in tune what's happening.
Yep.
But for protection, the credit card is the best way, so nobody touches your money. And also, don't have all your money in your checking account. If you have a nice amount of money, put it in a savings account and only keep very little in your checking account. So if someone does steal or tampers with your checking account, you're not taking $2,000, $3,000, $10,000, out of there. They're only getting a bit. That's something really good also to do. It's more of a pain to keep track of all this, but when there's bad guys, and they're going to do everything possible to target you. And it becomes more complicated to get that money back. It's more of a mission. And imagine if you needed that money to make your mortgage payment or your rent payment or your automobile payment, and you don't have it at that time. So this is just a good way to put, like a defensive block there for you.
Hey, and Chris, just what's on my mind, just if you can go back to the NFL for a second, and I know a big part of what you do is education for new players coming into the league, but how much of your business is also working with retired NFL players who have just gone through their money and need some help just, with a new career or figuring out how to take care of their situation?
I'll say about 20% of my business comes from the retired players. And I would say that's almost about the same thing with the seniors, when people are retiring. So a lot of financial advisors refer me their clients once they're going to start retiring. I have a lot of, like today I met one up at 8 o'clock in the morning. So 2 years before the client retires, he sends them to me so I could start already making their credit a lot stronger. And what do I mean by that? Paying a lot of the debt off. Staying with 2 or 3 credit cards, and that's it. Simplifying life. You don't want to carry too much headache. So you gotta be able to be proactive with that.
And how much of that is,
yes, Peter,
they keep thinking that the money's just not going to stop?
we never think the money's going to stop, Peter. That's, that's anxiety if we think the money's going to stop. So they think they're always going to make it. And we think we're always going to make money as well. Peter, how many of the youth start saving up? How many of the youth, thinks their 401k is going to last forever? It's not. We need to have some savings. We need to have some investments. We need to start working on that. And it could happen in the blink of an eye. Right now, my best friend, his mom is 62 years old. She had 2 strokes. 2 strokes at 62 years old, Peter. She can't work. She's disabled now. And it just happened in the blink of an eye. But if she didn't have everything else set up, it's such a big mountain, because now who's going to take care of her? The kids.
Yep.
Right? And I know as a parent, I got 2 kids. One of the things that I'm looking to do and working myself to do is not to be a liability for my children.
Right.
I tell this to my wife, at 60 years old, I want to pull the plug. I got 20 more years to work. I got 20 more years. That's it. At 62 years old, I don't want to work. I want to retire, not work. I want to literally, what my plan is? I want to go live in a senior facility that I have everything done for me. I don't want to think. The only thing I want to have is my nice car. That's it. I want to go to a pub. I want to go to my supermarket in my nice car. And that's it. That's all I told her. Yeah. That's all I want. But how can we do that? Yeah, I love it. But how can we do that, right, Pam? If we don't plan out from now, if we don't start putting all of our ducks in a row, so we gotta start doing that. And it's hard to do. It's hard to do because you have to change your mindset. It's hard to do. I read an interesting statistic today, and I actually did a video on it, that 40% of Americans do not have saved $1,000. They don't have $1,000 in their bank account. 40% of Americans. So imagine now, Peter, with all this inflation going up, what's going to happen?
Yep.
We're not even going to be able to buy a can of tuna anymore.
Yeah. No, and again, for seniors, it just becomes more tragic. Hey, Chris, yes. Just looking in the chat box, somebody asked, how do you build credit?
How do you build credit? Okay, very easy way. So a secure credit card, a prepaid credit card. So if your credit is poor, there's some banks, and you got to check around. So I'll give you the banks right now on top of my mind that has this. Citibank has a secure credit card. And I'll tell you what it is. Citibank, SunTrust, BB&T. So if you're in those states that has SunTrust or BB&T and now became Truist, they have a secure credit card. Regions Bank, Bank of America, PNC, and a lot of the credit unions. They have a secure credit card. So a secure credit card is a prepaid card. It's like a debit card. Whatever money you deposit into the account is the money that shows up in your credit as a credit limit. If you put $500, then it showcases $500 of a credit card. So it's like you're buying points. But this is like a savings account, right? You're not going to use it. You're just going to put the money there and you're going to let it sit, and your credit score is going to increase just by doing that. Now, bare minimum accounts that you need to have in your credit to give you the maximum amount of points is 3. You need to have 3 credit cards, bare minimum. So you can start developing strong credit. Now, ladies and gentlemen, you cannot do this. You cannot have just 3 credit cards from Bank of America. That means that you only have one friend that likes you. That's not good. You need to have multiple friends that say nice things about you. All right? You need to have multiple friends that say nice things about you. And this will start building up your credit. That's the best way. Now, there's another way to do this, but now if you do this, you're going to bother somebody else. It's called the authorized user. when you piggyback somebody's credit. So you can be added to someone's credit. So you could be added to your husband's credit, your wife's credit, or your children's credit. Now, a lot of your kids are going to ask you to add them as an authorized user to your credit cards. All right? Because now they're going to inherit the 10 years, 20 years, 30 years of great credit that you have with that company. But if you do that and they get a credit card and they use it, you're responsible for that debt as well. So if you do help out your kids, right? Do not give them a credit card for the authorized user, because you will be liable for that.
And
right, that's the two easiest way to.
And obviously, make sure that you pay them back monthly.
Always, always, always pay off your credit cards on time. Let's set up great habits. I will say each Saturday, pay off your credit cards. Look at your credit card bills. Your statements. I don't know if you ladies and gentlemen, you guys have a financial app that you guys monitor your finances, because remember, we're monitoring credit with Experian. What do you use? If I can ask our guests, what do you guys use to monitor your finances?
I use a credit tracking like Experian. I do that.
Okay. And I see over here Susan put here QuickBooks. Susan put here QuickBooks.
Yeah.
Okay. QuickBooks has a personal one. It's called Mint, M-I-N-T, mint.com. It is excellent. It's not even good. It is excellent. It's the same company. So Intuit, the mother company is Intuit. So it's called Mint. You're going to be able to put there checking accounts, savings accounts, credit cards, automobile, investment, your mortgage, everything you can put there. And you're going to be able to see how much money you have coming in per month and how much money is leaving per month, right? And they're going to give you a pie chart at the end of the month telling you where your money went. Gasoline, restaurants, clothing, whatever, grandkids. So if there's a leak in the system, you're going to be able to see where the leak is. Also, ladies and gentlemen, you're going to be able to monitor the monthly payments. So you're going to see how much money they charge you per month on interest on those credit card bills and on your mortgage and on your automobile. You're going to be able to see that. So if you're paying too much interest, you can then go and refinance it. Remember, in our golden years, ladies and gentlemen, we want to keep more money in our side. We don't want to just continue to overpay for items. So there's great banks, so like credit unions are really good for refinancing automobiles, and they also are very, very good with the refinancing of credit card bills.
Hey, Chris, there's a couple of things I want to ask you while it's on my mind again. Is that two things? One is that we had a member here. Can you just real quick say that again? That 40% of people in this country only have $1,000 or less in their savings, and so that is a correct statistic.
That is a correct statistic. Only 40% of America have $1,000 in their savings.
That's unbonbelievable.
So that is. Yep.
And so I'm sorry. Are you saying only 40% or only 40% have, or are you saying 40% don't have?
No, only 40% have $1,000 in their savings account. So we have about 60% of individuals do not have $1,000.
And what that brings is a huge retirement crisis coming up in this country. It's a huge issue.
There's going to be a huge crisis coming up now because there's going to be a huge issue right now because of this inflation. Our money is not going to be worth anything, right? Because we can't buy things anymore. You know, gas prices. I don't even want to ask Tara, what's her gas price over there in California?
Yeah, it's incredible.
You know, it's yeah. And I think Susan put over here, working with clients suspect that those charges being manipulated. What language do you recommend to use? You know, just tell them there, Susan, I can't borrow my credit. I can't over leverage myself. I need to have peace of mind for me.
Yep.
You just got to step in and say no. You got to step in and say no. And that's hard to do. Trust me, that's hard to do. You know, like I said, I have children now, and what was it? The voice of reasoning is very difficult.
Yep.
It's very difficult to be the voice of reason.
And one thing for me as well, Chris, is that in any business, there are bad actors, bad players, and whether it's your financial advisor, whether you're in the mortgage business, insurance business, it doesn't matter. Once in a while, you get some bad apples. Let's talk about for a second what makes you as good as you are, as respected as you are in this business, and what can any senior that we deal with, how can we pick the good credit repair places from the ones that are only in it for the money, unlike you, and then talk about fee-based versus transaction-based. Does that make sense?
I will say here, Peter, yes, I will say here, Peter, do your research, right? When you get referred by someone, and my business is always based upon referral. For me, I always try to align myself with great professionals, great referral partners. So when someone does ask me a question, I say, look where I came referred by. Do your research. Do your researches also online. See what other people have said. But also, ladies and gentlemen, is how do you feel when you speak with that professional? You know, I will tell you this, I'm not the perfect fit for everyone. If someone tells you they're the perfect fit for everyone, they're lying. You know, you got to feel comfortable with that person. And I like to be direct and blunt and straightforward. Like when I onboard a client, I tell them from A to Z what we're doing and how we're doing it. You know, so that they know already what my expectations are from them and what the expectations should be from us. So I will say that with our fee here, Peter, we have different types of fees, pretending different types of items that we need to do. We're introducing a great program right now because we want to help out more our community. We're introducing a 90-day game plan, strategic approach. So in 90 days, I'll be with you for 90 days. I will look over your credit report to see what is happening there. I will make suggestions on the pros and the cons. I will also make recommendations on what to do with those accounts. We will have a 45-minute Zoom meeting at the beginning. And then at 45 days, we will have another call, probably about 15 minutes to see where we're at. And then another call 45 days afterwards. So in 90 days, we'll be talking about 3 times, but I'll be designing a game plan specifically for the client so we can help them achieve their goals, and then they can start seeing how their credit scores and finances start getting better. And for that, we charge only $350. So it's a great program because we're going to literally see the whole spectrum. Checking accounts, savings accounts, your credit reports, names, addresses, how you're using them, which credit cards to close, if you need to close any, if you need to refinance. So it's a very nice program there. Now, if you do have something more severe with the credit, then we have a program that's for 12 months that will be working with you. Our staff will be working with you. And that program right there costs about $1,500 for the year. Yeah. But in that program, we'll be working on fixing the negative items on the credit report, advising you, guiding you, and being that voice of guidance. but you can see their results anywhere between, yeah, you can see results there anywhere between 40 to up to 150 points within 6 months in our program. So this is something really, really good.
The 90-day program,
look at that. I like that. Yeah, the 90-day program is $350. Yeah. So, thank you, Tara, for that. There, you see, $10,000 in savings.
Yeah, it's amazing and sad. And except if you're like me in the reverse mortgage business, where there's over $10 trillion in seniors' home equity, and that may very well be the answer. But that's another discussion.
Yep, so I just pulled it over here for CNBC. Just 39% of Americans can pay $1,000 of emergency expense. Only 39%. So 60%, nothing.
It's incredible. One last thing.
I'm sorry, Peter. Do you happen to, Chris, this is unbelievable. This is very, very eye-opening, and I happen to agree with you, right? You know, the senior, you know, they seem to be preyed upon in our community. And, you know,
yes,
towards your point about, you know, getting fooled, right? They also, there's a level of accountability with this demo, right? So if someone tells them they have a bill, they'll pay it. And it doesn't have to be an accurate bill. That's a problem. I was curious if that same stat that you have, do you have that broken out possibly by the actual senior population? I'm curious in the senior population what their credit worthiness, for lack of a better term, is compared to Gen Pop.
On the money saved or credit score?
Credit score.
Credit score.
Okay, I'll tell you right now.
And while you're doing that, Chris, I will say that you are a national company. So if you have someone that you're working with in California or anyplace else, Chris can help them.
Yes. Yes, I actually helped out a judge in Puerto Rico. That was pretty cool. All right. So this is really, really good. This is really, really good. And this is by American Express, okay? Hold up, I'm trying to load it. And this is why you have to be careful, because you become a bigger target. What happened? So ages, this is the average FICO score. From age 40 to 49, 684 credit. Ages 50 to 59, 706. 60 and above, 749. The reason why? Two gigantic reasons. You have no automobile debt, and by that time you don't have a mortgage debt. So you're wiping a lot of that big burden, right?
Yeah.
So this is why you become such a big prey, ladies and gentlemen, from people trying to do the identity theft, right? Because they know that your credit score is so good and that you don't check it oftenly because you're not buying items. Or this is when you become a prey to your children, say, Mom, Dad, I need you to help me out and lend me something.
Yeah.
This is why it's so big.
And I'll say this, and then we'll open it up for questions for the last few minutes. Matt from National Mobility and Seating will be on the next webinar. But I had a borrower where the two things happened. One is that we had a borrower where their daughter was in the other room and would go in and tell the mother not to do anything to hurt her mortgage or her income or anything, because the daughter was really angling to get it all for herself. And then the other part was there was a senior who had gone into a nursing home and had signed everything over to qualify for Medicaid, Medicare to her daughter. And usually, always the thought was that for her daughter, that the mother would never come out of the nursing home. She had control of her mother's money and nothing would ever change and nobody would be the wiser. Well, her mother fortunately got better. And she came out of the nursing home and said, now I don't need to qualify for this. Can I get my money back? Just turn over the rest of the money. And daughter said, no, what you need to do is come over to my house and see the new kitchen cabinets we got. And that's what happens, is that, you try to trust everybody, especially children. But to Chris's point, a lot of times when you're dealing with seniors and especially aging in place, it's the children it's family that always tend to be worse than the credit card people or the medical people or anybody else. It's the family.
And ladies and gentlemen, literally when you were just saying that, Peter, it just came to mind a movie that I saw. And it was shocking when I saw this movie, and it broke my heart when I saw this movie. The one that says I Care a Lot in Netflix. That was devastating. That was just devastating. But that happens, right? Because you guys are a business, a big business. You guys are a big business. So, what I tell the NFL players, I tell them, I'm like, I always give that app Mint to everybody. Because I tell the NFL players, even though you have a financial advisor, even though you have a CPA and a bookkeeper, they work for you. You need to have eyes on them. So the Mint is going to allow you to see how they're moving the money around, where the money is going.
Yep.
Same thing over here. If you guys can see that and understand that, it's going to be so good, because even if you have somebody helping you, if I'm helping you, you're going to be set up with experience. You're going to see everything that I'm doing for you. Because I want you to get the feel-good story. Say, oh my God, look at that 90-day program. We're able to increase our points, 60 points, 80 points. You feel good about it. But also, it's just knowing that someone is doing the right thing. So, trust, but verify.
Yep.
Trust, but verify. But yes, that was a very, very tough movie to watch. And I'm just thinking about that.
Let's open up. We have a few minutes. Let's open up for questions from anybody for Chris. And Chris, let me say that you've been great on this. I hope people also agree with me. But there's so much to this, because we deal with a market, as some of us are already, as I say, in a protected class. And in some cases, you and a few others are the only people protecting them. It may not, and that's the important part, is that, it's tough when you find out in later years in your life that your worth isn't what you always thought it was, or that there are bad people out there trying to take advantage of you. So to me, this was a great call, and you've been wonderful with this. And so let's just open it up. Any questions from anybody before we end the call? Any comments?
Yes,
I think
I have
Courtney
a quick
said
question.
I'm going to put my
it's
email.
so disturbing.
Hang on one second.
I think Courtney said it best. It's just so disturbing. That's all.
Yeah.
Very disturbing.
I have a quick question.
Sure.
So with the secured credit card, how many of those can you have, or does it matter?
So it doesn't matter how many you have, but minimum you want to have 3 open accounts in your credit that's working for you. And maximum credit cards, maximum, I always tell my clients, is 5. 3 bare minimum, 5 maximum. If you keep it at 5, it's something that you can always remember to make.
So you can have unlimited secure credit cards. You can have more than 1 or 2 or 3 secured credit cards.
You could have 3 or 5 secure credit cards if you like.
Oh, okay.
Capital One also does have one as well.
Okay. Okay. How many points?
Discover.
How many points will it raise your score by getting those?
So it could probably get you 30, 40 points more.
Each card, or
30 points more. Yeah, 30 to 40.
Each card.
No,
each
all
card?
around.
Oh, totally.
Each card is about 10 points. 10 points each.
Okay. Thank you. That's it. Thank you.
You're welcome. Don't use them though. Don't use them. If you use them, it'll count against you. Don't use them though. Don't use those.
Chris, can you give out your email address again?
I just put it right there.
Okay, you got it. Okay.
Yeah,
Thank you.
my email.
Yep. Any other questions from anybody else? Comments? Okay. Thank you all for joining us. Thank you again, Tara, as always, for making us the top-rated show on the Aging in Place YouTube channel. And we appreciate all of you joining. And Chris, again, this is great information, and I'm sure that we'll have folks we'll have folks that will reach out to you. And as your clock just said, it's 2:00 your time. So
Eastern time.
Yeah, it's a great way to end the call. Thank you all so much. Appreciate it.
Take care. Bye-bye.
Thanks, everyone. Hope to see you at the music therapy group tomorrow. And then Thursday is our national member meeting with Jamie Shapiro from Silver Lining Transitions. She also has a YouTube show called Silver Savers, where she helps people decide if they want to stay in their home or move to a senior community. It's really cute. So,
but her ratings aren't anywhere near like ours.
That is accurate. I'm not sure which direction though.
Yeah, that's right.
All right. Thanks, everyone. See you soon.
Tara. So long, Dave. Appreciate it.